now. All right, everybody, what's going on? What's up, everybody? Cool, man. Sorted this. Oh, 2:33. We got Dr. Jacqueline here. We got Michael Chang. What's up? We got the Crypto Gardener. Mr. Royalties. Man, a bunch of Jamaican memes have been popping up on my feed. I've been sending you some of them. I don't know if you've seen them, man. But they're super funny. We got Adele. We got Ron Abels. He is the chronic supernova stacker. He's been buying a lot of them recently. He's like our supernova maniac. We got Jamie Kennedy in the house. We got Solly. We got Ben Hayes. What's up, Ben? We got Martha. We got Ben Hayes again. We got Tim in the house. We got Luis or Lewis, whichever one of those two. Jay Morton, Falcon. Nice, Falcon. We got Jane. G. Jane. Something like that. Kenneth. Jason Vamoa. Jason, are you still in are you in Thailand? Is that where you're at? Is that where you're located? I don't know. We got King Royale. What's up, King Royale? We got Sali in the house. We got Drebel. We got DeFi Panda. We got New Waves of the World. Cool. New Zealand now. Oh, that's cool. What time is it over there? It's like the opposite side of the world. Wasn't Japan. Nice. Man, I got a friend going to Japan. I want to go to Japan. Yeah, tell us how New Zealand is treating you, man. I had a client that was just in New Zealand. I don't know if he had good things to say or bad things to say. I can't remember. 9:05, 9 a.m. Hey, that's not that bad. That's like a 6-hour difference. Really? 6 hours? Interesting. I didn't know New Zealand was that close. I thought it was on the other side of the world. Maybe not. Maybe it's a little more, a quarter of the way around the world, I guess. Wow. Oh, so it's tomorrow for you guys. Oh, wait. Is it 18 hours ahead or 6 hours behind? That's the big question. Right? Is it Tuesday where you're at, Jason, or is it still Monday? Probably Tuesday over there, isn't it? Tuesday. Oh, wow. Oh, wow. Look at that. We have a time traveler. Jason has traveled all the way back from the future, the 18 hours ahead of us future. Tell us what Bitcoin did tomorrow. Back to the past for you, man. I'm in Monday still. I'm in Monday land. Crazy. Interesting. So does that mean are you on the other side of the I don't know. I need to freshen up on my geography. I'm not the best at geography. I actually had the option to either take geography or current events in high school, and I chose current events. Just because the teacher was cooler. So I was like, I don't know. Let's see here. I got everything ready to go. We'll get into it. We got some stuff to cover today as usual. Let me just make sure we're going to operate a smooth boat here. And it is February 16th, 2026. We are 1.5/12 of the way through the year. 2 months in. Time is flying like a bird on rack. I don't know. We got moths now in Panama. We got like every season around February, these big moths like start showing up. I was meditating this morning looking at the ocean and there was one like just flying around my window, like bumping into it. But it's that time. Moths are coming out. They're like big moths too. They're like this big, some of them. There's a lot of things that fly out here. Happy New Chinese Year. Is today the Chinese New Year? Or is it tomorrow, the 17th of February? I think it's tomorrow. But for Jason, it's today. Look at that. I told you he's in the future. Look at that. Yeah, tomorrow's the Lunar New Year, the year of the horse. I got these glasses. You guys may or may not see me wear them in the near future, but I got these like red tinted glasses, and they're year of the horse. So they have a little horse emblem on the side of them, and they're red for like all the computers. Yeah, there you go. I am the math guru, just not when it comes to simple math. All right, let's begin this stuff. Let's begin this stuff. Raymond, are you out in New Zealand? Can somebody put my screen up, please? Are you out in New Zealand too, Raymond? I didn't know that. It's pretty dope. Really dope. We got people from all over the world. Hey, look at that. All right, this is just something I wanted to put up here. North Island, nice. Let us know how long you've been out there, man. That's really dope. But I wanted to kind of put this out because I saw this come up on my X. There is a new scam going around. If anybody here has a Ledger or a Trezor hardware wallet and you are receiving mail in your physical address. Oh, wow. I did not know Raymond lived in New Zealand for 32 years, born and raised. That's dope. He comes to a lot of our classes. He's won a lot of our things too. But check it out. So just to get back on focus, they're sending mail to people's houses and yeah, asking you to scan a QR code and you give over your seed phrase and the next thing you know, it's your crypto's bye-bye. So just be aware of that. Okay, if you guys receive any mail, no matter where in the world you are, I'm sure you folks in New Zealand also get mail. So, just beware. What's up, Antonio? All right. Yep, you never ever share your seed phrase, by the way, ever with anybody or anything unless you recover a physical ledger. If you lose your ledger, you need to recover it. You'll use your seed phrase. Outside of that, never use it ever. The fear and greed index. So we are still at extreme fear. The market is still in a state of panic. Okay. Yeah, don't even trust the phone calls. Ledger's never going to call you. But yeah, so we're still in extreme fear. Okay, you can see the yearly low actually came in at just a few weeks ago at 5. We're kind of starting to recover that extreme fear, but we're still in the zone of extreme fear. And just because we're in extreme fear doesn't mean the market can't drop more, because it has in the past. Okay, and this doesn't go all the way back, but just beware of that. But usually when you zoom out far enough, this does provide really good opportunities to potentially accumulate for the long haul, right? So if that's your intention, the fear and greed index is good. And when we get into extreme greed, those can be good times to get rid of some coin or take some profit, Here is a little bit of a look at the inflows and outflows of what's going on with the US ETFs, right? Because that's been a big reason of why, this is the price of Bitcoin here, right? And when the ETFs first came out, that was a huge reason of why Bitcoin went from, you could see, under 50,000 to over 100,000, right? Because it was in this net inflow territory. Since about November, right? And you can see inflows kind of follow price generally. So if the price is going down, again, usually the fear is going up. So people get more fearful. People start pulling their money out. Price starts going up. Inflows go in. So a lot of times the narrative follows where price is going. But you can see like net, we've been very positive actually still, but we've been net negative for quite some time. But this is another thing I want to point you to, and that's the resilience of this ETF. If you look at this, this is the cumulative flows since they really started, since it's gone from 0 to, I think this is 60 billion or 600 billion. I'm not sure which. Yeah, I don't think it's 600 billion because that's like a quarter of Bitcoin's market cap or half of it. But $60 billion, yeah, millions, 60,000 millions and 60 billion. So yeah, you can see like, yeah, the cumulative has gone down, but we're still where we were in July of last year, and Bitcoin now is lower than where it was in July of last year. It's lower than it's been since the beginning of January. January 2025, Bitcoin was 100,000, and the net flows are still up pretty significantly. So it's telling you that smart money is not exactly leaving the space just yet. I think it's just very obviously fearful, as we can see by the fear and greed index. But if you look at some other metrics, this is the exchange whales outflow. So this is basically a big sums of Bitcoin leaving exchanges. And usually this is how you can track what whales are doing, right? They go to exchanges to buy Bitcoin, and then they withdraw it in cold storage where they can't sell it. You can see like in the 2022 bear market, right? As the price of Bitcoin was going down, they were accumulating and taking coins out of the market. They continued doing that throughout, 2024. And right now it's been really picking up, especially with this drop to 60K that we've seen. We've seen a lot of whales accumulate Bitcoin, right? Which is not exactly a bottom indicator, right? Because they've accumulated heavily in the past and we've seen prices slide down, right? But we have also seen them accumulate a lot, right? Since 2022. And that was when the market really sold off, right? They had a big tranche here. And then, yeah, the market made a new low, right? And we'll actually talk about these lows a little bit and how they correlate with something else that's going on. Here's another look at Bitcoin versus gold. Now, the purple line is Bitcoin against gold. I mean, gold against Bitcoin. And then the blue line is Bitcoin's price against the dollar. So basically, since the start of Bitcoin, gold has lost a lot of value to Bitcoin. But very recently, right, this is the first mention of quantum on the core developer mailing list, which was sometime last year. The topic of quantum computing has become a little more popular with Bitcoin. And then there was even a quantum Bitcoin summit as well, right? And you can see since the topic of quantum has kind of come up, the price of Bitcoin has fallen pretty substantially. Now, I'm not saying that it's because of quantum that Bitcoin's price is sold off, but it's one of the ingredients that's led to the sell-off. Is a lot of people are very fearful that Bitcoin is going to be taken over by quantum computing, right? Quantum computers might be able to hack Bitcoin. And you can see since then, gold has been performing a lot better than Bitcoin has, right? And if you look at some technical analysis, there's a trend line here. It looks like gold is broken out and has been doing a lot stronger, a lot better than Bitcoin has, right? Which usually on a macro scale, it makes lower lows and lower highs against Bitcoin, right? Lower lows, lower highs, lower lows. maybe this is a lower high, but if this starts to trend the opposite way, we could be seeing interesting rotation taking place. But this reader is saying it should be valued a lot higher relative to gold, but it's not. The valuation trend broke down once quantum came into awareness. Don't read this post if you want to stay high on hopium instead of seeing things as they are. He's saying likely Bitcoin will be patched with quantum resistance signatures. This doesn't fix the issue of 4 million lost coins coming back into circulation. So there's a lot of lost coins in Bitcoin, and they were on an old standard. And when Bitcoin got an upgrade, it's something that I understand is you had to move those coins into a new wallet. And then that would kind of make it quantum resistant once the quantum patch kicks in. So this is still a substantial amount of lost coins that could be hacked by quantum compute, which is a risk. Like sometime down the line, if, I don't know, Russian hackers or Israel or whatever person or entity that gets their hands on a quantum computer can actually crack the seed phrases of these 4 million coins, I mean, you're talking about probably a gargantuan drop in price, right? And that's interesting that those coins are still out there. And I don't know, I'm not a coder, if they can or can't be patched, right? He said it's a 75% chance that lost coins will not be frozen by a protocol hard fork, right? And I don't have the rest of this thread here. But there is also, you can see a lot of the FUD here, right? So how quantum computing may be impacting Bitcoin's valuation. Quantum computing fears broke Bitcoin's 12-year gold outperformance trend. BlackRock to control Bitcoin. Nick Carter warns quantum risk could push IBIT issuer to influence Bitcoin governance. This is another kind of conspiracy, but IBIT, the U.S. government, Michael Saylor own a very large portion of the Bitcoin supply, which gives them a lot of governance and the future of Bitcoin. If Bitcoin goes this direction, if they fork it or something. So I'm not sure if they have any sort of crazy plans down the line, but I'm sure they could get something up their sleeve. Now I don't know what that would mean for Bitcoin as we know it, but I don't think that Larry Fink has any intention of seeing this market go to zero, right? Like, so we got to remember they're incentivized to see the price go higher as well. But there was also this update I saw. Now, I don't know if this is confirmed because I just saw it on X, but it seems like there's a new upgrade coming called BIP 360 that's laying groundwork for post-quantum protection. And basically, this is an upgrade that would come to Bitcoin that would upgrade it to become quantum resistant, right? Now, I was unaware of this, but I don't know how these 4 million lost coins will get affected by that, if it is or if it won't. But it's just interesting to see that the advancement is going on right now. I'm sure the Bitcoin community might find something to do with this right here without affecting decentralization in any way or anything like that. I mean, who knows if the coins are lost? We don't actually know. It could have been just some person that is just holding forever. It could be Satoshi Nakamoto. I don't know. But it's just interesting, But I know that quantum computing is still like a ways away. It's still a lot, and a lot of people are actually saying that right now we're in an era of the quantum discount on Bitcoin as well. Like when Bitcoin does become quantum resistant, then fundamentally you may have to price its risk differently. And that might be when even more capital would flood into Bitcoin. Right now, I don't know if it gets upgraded first and then the money floods in, or if it gets hacked first and those 4 million coins somehow get sold off on the market and we see an 80% drop in Bitcoin. But again, that's part of the importance of knowing when to stay on the right side of the market, because there's so many uncertainties like these that fundamentally can change the value of something very quickly. And the market, remember, tries to look into the future and say, well, if quantum computing is advancing, that's a risk to Bitcoin. Let's like sell Bitcoin or be more bearish on it. So it's interesting. Here's another interesting look. So if you guys remember, for a very long time, we were looking at the global M2 money supply and how correlated it's been to Bitcoin since like 2023. And then last October, September, that correlation broke. Now, I think that the reason why it broke was because so many people started looking at it. It's almost like when everybody has the same information, that information doesn't get priced the same. But this is an interesting, I never looked at this or never thought about this, but this is a person pointing out, this is Japan's money, M2 money supply, which M2 is just basically, that's the money that the commercial banks print. And if you look at M2 versus M1, M2 is like 10 times higher than M1 because the central banks print the reserves and then commercial banks have the reserves that they can lend out 10 times, right? So if a central bank prints $6 trillion of reserves, commercial banks can lend out 60 trillion, right? That's the fractional system. So if you track M2, you really track the money that's in the system as opposed to just reserves, right? Now, it's pretty cool because I never saw this, but you can kind of see a correlation between the Japanese M2 supply with the price of Bitcoin. Right now, if you guys are aware, there's a huge carry trade where Japan had their interest rates very low for a very long time, and people would borrow Japanese money to go and invest it in other markets or other currencies. It was basically free money, right? And now that Japan is raising interest rates and the US is lowering interest rates, it kind of puts a wrench in that carry trade. Now, whether a lot of that has been priced in or it's not, the articles for quantum 9 hours, 9 hours, 12 hours ago. So in the last 24 hours. And this came out today as well, Antonio. But back to the Japanese M2. So you can see this is a 10-week lag on Japanese M2, right? So it is looking like it's trending up, right? Now, this doesn't mean correlation is not causation. This could not mean anything, but it is interesting how it's been correlated at the highs and the lows within weeks of each other, you know? And now it seems like Japanese M2 potentially has bottomed and is potentially starting to trend up. Now, whether we see Bitcoin make a new low before it goes up or go up before that, I mean, we don't know. That's not information we're privy to. But you can see that. So while global liquidity was rising, Japan had been falling since around July, shortly after the April 2025 tariff shock. And this matters a lot because Japan's liquidity reflects deployable leverage, not just passive money supply. Okay, so this is leverage. Like the Japanese yen was a lot of leverage that was in the system that had to then get unwound. So it's interesting. And here I want to point to something that we're going through right now, and we've looked at this in the past, but this is in 2019, September of 2019, when the Federal Reserve began a program called quantitative easing, where they restarted quantitative easing. This blue line is a chart of their assets, right? Which their assets are just mortgage-backed securities, treasuries, you know, they print money and they buy these debt instruments so that they can, again, inject liquidity into the system. Sometimes they take liquidity out of the system. Sometimes they put it back in the system, right? And that's what they did from 2019. After 2020, they did a whole lot more of it. And you can see Bitcoin is kind of correlated to it, right? It's very sensitive to liquidity. The special thing about Bitcoin is it's a truly finite asset. You can only have 21 million. You can't have that with any other asset. And a lot of people overlook the significance of that because it doesn't matter if it's gold, silver, stock, real estate, all of those things you can make more of, right? I can make more stocks. I can make more homes. I can mine more gold. I can mine more silver. But when it comes to Bitcoin, the fundamental thesis for it is true finite supply. That's also true with a lot of other crypto. You know, like Ethereum is technically infinitely inflationary, but it's also deflationary, right? Chainlink, you only have so many coins. XRP, you can still only have so much supply, right? And that's something that gives crypto, no matter what crypto it is, outside of not the shit coins, but like the blue chips, right? Like some of the ones I named, like Tau, right? Like they really have a finite supply. And in a world that will constantly print more money and constantly get into more debt, it's a matter of time before those just get into an equilibrium with the amount of liquidity that will be in the system or is in the system, right? But you can see that it's not always a direct, oh, we made more reserves, right? The Federal Reserve is printing money. Like we go buy Bitcoin because you can see that since they started the program in 2019, Bitcoin made 1, 2, 3 lower lows before it went up, right? And you can see that. I mean, this is COVID, right? This is the 2020 crash. Maybe if we didn't have COVID, Bitcoin would have just started to go up infinitely, but it got repriced pretty quickly, and you can see like we had that crazy bull market where Bitcoin went from $4,000 to 69, back down to 17, back up to 124. Now we're back down to 60. You know, and the way that the market looks right now is, you know, we are also in a phase of expanding the balance sheet right now. And we're doing that through reserve management purchases. This article came out December 10th. We talked about this back then, but the Fed will start technical buying of treasury bills to manage market liquidity. So the Federal Reserve right now is printing about $40 billion every month and buying these treasuries to keep interest rates low and also to stimulate the economy. And if they're buying treasury bills, it means they're funding the government. Very interesting. They're like independent institutions. The Federal Reserve is not even a federal branch of the government. You know, it's like an independent organization. But it's just interesting. You know, they obviously help the system. In many ways, they have more control over the system than even the United States. You know, because they're the ones that decide the fate of the dollar in many ways. But December 10th, they started their program, and you can see that since then, the balance sheet has started to expand, right? Now, what's interesting, and I have two ways of looking at this, right? Since that started, you know, Bitcoin made 1, 2, 3 lower lows, okay? It did as well here. Or maybe it made 2 lower lows. It depends on how you look at this, right? This is a 3-day like chart. So, or it's looking like this, right? Where we made 1 low, 2 lows, and potentially we still have another low to put in. And this is just a fractal, right? Look, comparing the past with the potential present / future, you know? So again, we're printing more reserves, 40 billion per month. They say it's not quantitative easing, but it kind of is. So do we get another low before Bitcoin goes higher? Do we go down to 50K, which would be, again, just probably a big bargain for the price of Bitcoin when you look at the long term? Or is it going to bottom here and we're doing something like this, you know, 1, 2, 3 lows, and we're potentially going to fly higher? I don't know. But you saw what some of the whales are doing and everything like that. Now, outside of what's going on in crypto, we got some things to also talk about. So we are seeing generally a lot of volatility in the stock market. It's kind of been going sideways and down, right? Which, again, is just, it has some people on the edge of their seats. It has some people, some analysts worried, right? And you could see this is, we expect investment grade bond issuance to hit a new record high in 2026 to the magnitude of 2.25 trillion, right? And you can see last year There was 1.8 trillion of bond issuance. This year, about 2.25, which is a 24% change year over year. Okay. Now, what that means is investment grade bonds are, hey, Microsoft needs to raise money. Oracle needs to raise money. ChatGPT needs to raise money. NVIDIA, who doesn't really need to raise money, but if they wanted to, they could issue these bonds. They could say, hey, we need, $100 billion from the market. We're willing to pay you guys 6% annually. Who wants to invest in our investment grade bonds, right? So you can see there's a lot of debt potentially starting to acquire. It's been that way since 2020. They only borrow. Look at 2022. They borrowed less, right? They've borrowed less in 2022. And you kind of saw what happened in 2022. Well, interest rates were high. So less people borrow, less business is stimulated, less products are sold, and earnings go down, and everything kind of prices itself around a slowdown. When debt goes up, investments go up, money goes up, right? Like now, Oracle, or I don't know if Oracle is the best because they've gotten a lot of debt, but say Microsoft borrows $100 billion, then they go and reinvest that into the economy. Maybe they're going to build some more data centers, and then that's going to employ people. That's going to get money flowing in the system. And again, that's just something that as debt goes up, usually we see the market inflate with that debt. And markets really operate on a boom bust cycle, right? Where you could see 2020, lots of debt, 2021, a little less debt, and 2022, a lot less debt. And then we saw that whole bubble kind of pop with high interest rates, right? Then since 2023, we've just had more and more debt. So now, and look, we have about almost 2 times the amount of debt that we had in 2023, But again, it's one of those bullish catalysts, I think, because as these companies borrow, it stimulates the market in some way. And now this is the growing market for tech credit default swaps, right? Now, credit default swaps are basically an instrument that says, hey, in case Amazon goes under, in case Facebook goes under, Microsoft, NVIDIA, or Oracle, which is the biggest because they have like 5 times the amount of debt that they do revenue and assets. If they go under, you make money on a credit default swap. That means if somebody defaults on their credit, you might be able to, make money from that. That's like a hedge. It's you buying insurance. And you can see that credit default swaps have kind of gone up pretty dramatically. And it seems like even for companies like Amazon, people are buying those credit default swaps. Well, actually, this is the notional outstanding. So like in December, credit default swaps for Facebook and Microsoft appeared. And since then, for NVIDIA too, you can see a small slice of NVIDIA credit default swaps. And then Oracle has just been growing in size as well. So again, something the market might be nervous about is what happens if these guys, default on their debt. Would not be a good look. But on the other side of that, a lot of this debt, right, this new issuance, what it's going into is something called CapEx, capital expenditure, right? So you could see in 2023, we had $140 billion of capital expenditures. Then we had more in 2024, and the market went higher. We had more in 2025, and the market went higher, especially for these big tech companies, right? Like Oracle, CoreWeave, Microsoft, Facebook, Google, Amazon. And this year, we're expected to be at $740 billion. Next year, 2027, we expect even more, right? And remember that debt, again, it boosts the share prices, stock market potentially goes up, and investors are happy because money is flowing and valuations might continue rising, right? So until we start seeing this number come down And I actually don't know how long it might take us to see that. It might take a real recession or something of that sort to see that number go down. Right now, this is a new Cold War, arms race, whatever you want to call it, to see who can make the most amount of progress in AI. And all of these are big tech companies that whoever has the best model is where everybody's going to go. Like Apple dominated the phone industry, so they became on top when it came to iPhones. But right now they're super behind when it comes to AI. They like completely missed that trade. Um, I don't know if they even have to, but who knows? So yeah, pretty interesting. You can see the compound annual growth rate from 2024 until now. And if you look at a lot of these companies, right, they've grown in share price also similarly to how these have grown as well. It's just interesting. After record shorting, hedge funds bought the most tech stocks since 2021. So you can see on this little picture, hedge funds, who's you could call them the smart money or the big money. They are mostly selling out of sectors like real estate, consumer discretionary, utilities, industrials, healthcare, or they're buying healthcare. I don't know. Doesn't matter. But you could see that the most amount that they bought just recently was technology stocks, referred to as information technology. And these sectors wrap companies in like NVIDIA and just all your tech companies, like the big Mac 7 that we kind of see. And then if you look at a very popular ETF that's out there called the Expanded Technology Software Sector ETF, that is down 30%, which is actually a lot for an ETF. Usually, an ETF isn't supposed to have so much volatility, it's supposed to be a little more stable. It's down 30% since October, since the market kind of topped out. And this is a pretty big, pullback for the technology sector, which there's a lot of selling going on because of how much AI is disrupting. They're like, wait, do we even need certain businesses anymore because AI and this Claude bot can just do it all for us? Like, do we even need all the technology companies that are out there? So there's a little bit of a panic going on when it comes to technology. The best of times. This is interesting. So Jeffries, which is they do like statistics and analytics, shows that despite the dip in the beat rate, intra earning per share revisions have been fairly stellar, and that this bodes very well for the future performance of equities. So what they're looking at here is your earnings per share, right? I think a revision is when companies beat their earnings. So when they do that, like the people who rate them have to now revise what they think the company can do in the next 12 months. So it's and the top quintile of the group is beating their earnings and are having these really big revisions of about 17% over the past 12 months, right? So what it kind of does is as these numbers go up, usually the stock market kind of follows. And you can see when that number goes down, like it did in the first quarter of 2022, third quarter of 2022, the market also goes down with it, and we had that phenomenon. I'm not going to include 2020. It's not as important because it was a black swan, but we had that pre-2019 and the market kind of went down then, 2015, so on and so forth. So this is a good thing for the market, is these revisions that are to the upside, right? And you can see this another really nice thing. So US growth is picking up. You can see this is a analysis of the US heavy truck orders picking up sharply. And this is normally an early sign of recovery, right? Now look at the blue line, North America Class 8 truck orders. So more people ordering more trucks means there's more things going on in the economy. And then this is the North America Class 8 truck sales. So sales are kind of picking up, but the truck orders, right? I think this is for new trucks, is picking up pretty dramatically. And you can see it did that in 2020. It did that towards the end of 2022. And usually this is a leading indicator that they're expecting a lot more in the economy. Oops. And you can see that this survey right here is suggesting that global growth is about to pick up big time after 3 years of stasis, right? If you guys remember that ISM that we would look at, that indicator that looks at as the economy expanding or contracting, right? You have this Centix Global Expectations Index, which really lags a month. And you can see that it's been pretty accurate with the World Manufacturing PMIs, the Producer Manager Index. And like in 2021, we had a huge bull market because the economy was expanding so much. And since about 2022, we haven't really seen a whole lot of expansion. We've kind of seen the economy go sideways. But right now, we're potentially starting to see a change of trend. And again, usually crypto does really well in these times of expansion, like when the economy is really expanding. ETFs and indexes like the Russell 2000 do really good because that's more your small or mid cap businesses. And yeah, it's really nice to see that their expectations are going up. It's part and parcel because of these new truck orders. Again, these different data sets kind of just wrap into a prediction. But if the economy is expanding, that's usually really good for equities and for us in crypto, because that means that potentially the crypto sector is going to boom. Now, with all that information, you see there's like the ugly, there's the good, there's the potentially this could happen, potentially that could happen. Lots of uncertainty. So in times of uncertainty, it really pays to have a very well positioned system, right? And that's what we have here at the ARK and at the vaults is we have very nice algorithms. Now, they might not be doing 10% per month or 20% per month like some of these other high risk, seductive investment opportunities that may be out there. I haven't really seen any, to be honest. But what they do well is manage the risk around these uncertain regimes, and they do it without leverage. So they do it with a way where they manage their risk independently in every strategy. Okay, so Gemini Bitcoin is actually currently in a short trade. And this is the example of how, I mean, V4 is a huge upgrade to these strategies. But you can see over the weekend, we actually went long Bitcoin because it started to show early signs of a potential breakout, right? You can see that when it crosses this moving average, which if you guys are interested in understanding how these systems work in more detail, we actually went over it in detail in the last Inside the Vault. So we talked about how these strategies kind of work and operate and some of the improvements that were made to V4. But you can see we went from long to getting stopped out. So that was like, I don't know, a 2% loss, something like that. And then now we're attacking on the short side. So potentially if Bitcoin goes down, any strategy that's using Gemini Bitcoin is likely to go up in value. And you can see that this is Gemini Bitcoin over the past month, holding an 8.6% profit. We have given a little bit of that back with that long trade. Now we're getting back in on the short side. And yeah, it's looking pretty nice. We're about 1% in profit, which could last. It could not. It could be more. It could be less. But it's very, very good at managing its risk, you know? So the stop loss is about 4.5% out, but also at some point in the algorithm, it's going to trigger a trailing stop loss to cut that loss for less, which is interesting. Gemini ETH is also still short. So Gemini Bitcoin has closed its short trade and then Bitcoin went sideways. Gemini ETH is still holding on to the short trade, right? And you can see that that short trade is up 38.5% in profit, which is just, this is showing you, if you want to see excellent results from these strategies, you have to be in and invested before these big trades come, because now this is going to close out for, let's say, a 30% profit. Now that 30% profit can compound in subsequent trades, right? And these really big trades, they don't come often. So when they do, it's a very special occurrence in the strategies themselves. And you can see that Gemini ETH, which was, I think, at 120 last year when this year started, is now up 34% in the last month. I mean, those are huge numbers, and they really just show what these strategies are made of, right? And we're approaching, next month, there's going to be a year anniversary of Gemini ETH, and it's looking like we're going to close the year about 60 to 70% in profit after fees, which is just absolutely absurd. And you can see it's been averaging about 5% per month for the last year, which is just an excellent return. So yeah, I mean, these right now are the flagships, is Gemini Bitcoin. In the back testing, Gemini Bitcoin even does better than Gemini ETH in some cases. But Gemini ETH, at least for us, has been the best performer. It was the best performer last year, and it's still continuing to be the best performer this year. As for the other strategies, we can take a look at what they're doing. So this is Gemini Solana. So Gemini Solana has gotten chopped out of some short attempts on Solana. You can see it tried to take a short trade here. It got stopped out there. It tried to take another short trade here. It got stopped out there. So it has taken year to date. This is the V4 strategy, has taken 5%, a 5% loss. And then our Gemini Solana script, which used Gemini V2 at the beginning of the year, and I think that led to about a 6%, 5% decline, and then it's taken 2 losing trades since. You can see right there, and then at the beginning of the year, we were in a long trade on Solana as well. So that's that. And then this is Gemini Cardano. Okay, this is just for the signals. We don't have a vault for this. But you can see since the beginning of the year, it's sitting at a negative 1% profit, which is better than the HODL being down 15%. So it's just, again, it's just managing risk throughout this time. And it's done a little better since the downside has kind of started in the middle of January. It's had very profitable trades that it's closed on Cardano there, which is really cool. And these are our Leo strategies. So this is Leo Bitcoin. You can see that V4 has not taken any long trades on Bitcoin. Wait. I have the chart of Solana here, and that's my fault, not the Bitcoin. But basically, Leo Bitcoin just looks like this chart without the red. So it took this one long entry and closed it for a small loss. You can see here, Leo Bitcoin is down, 4.5% over the past month, but Bitcoin is down 30% year to date. So that's that. Leo ETH is sidelined. It did try to attempt a long trade back here at the beginning of the year, and it cut that for a small loss. And it's just been in cash in a position of power since this whole 30% decline has transpired. You could see ETH is down 33% since the beginning of the year. This strategy, V4, is only down 3%. And we can kind of see that in Leo ETH right here. Leo Solana did take a long trade at the beginning of the year. Now, we were not on V4 then. V4 actually closed it for a small profit, whereas we got into the V2 trade later on in the price, and we closed that for about a 5% loss. Okay, now again, it doesn't feel good to be in losses when you're in a system like this, but when the underlying asset is down 32%, you're like, okay, you know what? Yeah, I'll take a 5% loss, right? And again, we've seen a pretty big upgrade for the Leo Solana and the Gemini Solana strategies as of this year. So hopefully moving forward with Solana, which is currently at $85. I mean, this thing was at 200 or over that, 250 at the beginning of last year, right? So it's lost a lot of ground. Hopefully, and it's pretty nice to have this kind of reset happen because now we have better strategies. And when the market does recover and does go back up, which remember, we make more money in an up market than a down market because you can only go down, you can go down to zero, but you can go up to infinity. So as Solana starts to recover and as these institutions really start to pull out their cards for blockchain tokenization, all of that, we could see a huge bull market return to crypto. And then we're positioned for the best upside in that whole journey, right? Right now it's tough. It's a bear market. I didn't think I'd be saying this, but it is. But hey, that's just another opportunity for that reset, for that wealth in a way to reset itself again so that when we go back into another 2020, 2021 type of market, we're starting off at a very strong foot. We have some of the best strategies in the world, I think, really, with what we have with the Leos and the Geminis, and they don't use leverage and they're just here to manage the risk as to the best of their capabilities. You know, now there's a huge discount even in the share price for Leo Solana. So, you know, our high watermark on Leo Solana is like 103. So basically, you can almost double the share price without any of those performance fees, which is really nice. But yeah, that's just the state of our Solana strategy. Down a little bad, but we have hope. And you know, when the new strategy really kicks in, when Solana finally starts to make its recovery, I'm sure that Leo Solana is gonna navigate that beautifully, especially when we go into this next bull market before the next bear market, before the next 2025 event for crypto or the next 2022 event for crypto. After we've had a run, we know how to take that profit because the strategy does it for us. And then again, we sit out the next bear market. And yeah, and I mean, V4, right? Had Leo Solana, had V4 come out before it did, before we got it, right? Leo Solana would be up 1% right now. You know, that would be nothing but way better than down 30%, which is what Solana's down 32% since December 30th here. And Leo Cardano is sidelined, so it's not in any position. I mean, Cardano has a long way to go before it even starts thinking about long trades. Okay. And you can see all of our stock strategies are sidelined. Okay. Strategy did attempt a short trade that it got stopped out of. Again, took a small little loss. Tesla has not really taken any trades this year. It hasn't really done anything with price, but I am excited for Tesla because there's talks of, you know, they could potentially merge with SpaceX and Grok AI, and all of Elon's companies could potentially come under one roof. And if the only way to get your exposure to that is by buying Tesla, like that's potentially a huge upgrade to Tesla's stock price. And again, we have an algorithm that does fairly well in bull market, bear market regimes and navigating those for equities and like stocks like you see here for Tesla. NVIDIA attempted a few trades, a long trade, a short trade, and you can see that the price of NVIDIA has just been kind of sideways since really August. So it's taken a few small cuts since then. But again, if we see NVIDIA either break out and go into a raging bull market or break down and the whole stock market goes down with it into a bear market, this thing is going to short it and potentially do yeah, Michael, it makes Leo Sol down 40% from launch. Yeah. But since V4 came out, I mean, we haven't really seen any trades in Leo Solana. So in a way, it's reset, but not really. And I think 34% because it's at 66. But yeah, so NVIDIA sideways. But again, what's exciting about this algorithm, which you can see, it's been chopped around and it's taken a lot of small losses because the stop loss on this is like 1.5% or 2%, but I think it's like 1.5. Very tight stop losses to hopefully get into some runners or get into some really good short trades. So if NVIDIA is the biggest asset in the world, and if we are in this crazy bubble for AI, you know, once that bubble bursts, NVIDIA could come down really hard and we would know when to engage on the short side for NVIDIA like we did for MicroStrategy last year. And this brought about a 30% gain, right? You can see your equity would have gone from about 20 to 25,000 all the way up to about over 30,000, right? Interesting. FNGU is just still flat. It does not go on the short side, so it just goes long. And FNGU is just the FANG stocks with 3 times leverage. This is TQQQ, TQQQ. You can see that's been out of the market since October. This only attacks on the long side, and the NASDAQ hasn't really done too much since then. But it was able to, you know, amass a little bit of profit from the run in the summer. And then IBIT, which is one of my favorite stock strategies that we have because this gives me exposure to Bitcoin, but it also tells me when not to hold Bitcoin in my retirement account. And you can see that I sold IBIT up in the 60s and now we're down below 40. So this has been really good at navigating, you know, the IBIT side of things and whatnot. So yeah, it's pretty interesting. And this is really my last slide. So if we have any more questions, I can take them for the next 5 minutes. But that's just a little bit of a update on where we're at on the state of the market and all the things that we look at every week. Cool. Fire. Solid. Cool. All right. Nice. All right, no questions. It's cool. See you guys. I'm go off and do my stuff. You all have a amazing time. Jason, enjoy your day in New Zealand. As with you, Raymond. Enjoy your tomorrow. And yeah. You guys have a awesome rest of your days, nights, wherever you are in the world. And yeah, we'll do it all again next week. Peace.